Welcome everybody. This video is going to go over volume profile, and it's going to start off with the basics, going into what volume profile is, how to read it, and then it's going to go into using volume profile to shape a market bias and provide context to the current market state as well. And we can use this information to day trade, swing trade. It really doesn't matter, just depends on your style, and you're going to adapt maybe a higher time frame bias if you're swing trading, or you're going to look more at the shorter term bias if you are day trading as well. Okay, so let's just get into the dynamics of volume profile, what it is. First and foremost, a volume profile just shows us where the transactions have happened. We can look at a volume profile from an entire session. We could also look at a volume profile from a set amount of candlesticks or time as well. What you see on my screen here is a volume profile that is going over the New York session for the micro NASDAQ futures. All right. So I'm going to be using these profiles because this is the instrument that I trade, and I primarily day trade. So this video will have a little bit more context to day traders out there, but you can apply the same concepts to higher time frames as well. All right. So what we can see is the volume profile, the distribution of all transactions that have happened on a various day of trading. And what you will notice is that there is what we call the low volume nodes, where there is not a lot of volume that was transacted at certain price points. All right. And then you can see the high volume nodes, where there was much more volume transacted at certain price points as well. So you have your high volume nodes and you have your low volume nodes. All right. The low volume nodes, these are areas where the market moved very quickly through these price levels and did not transact a lot of volume. So most likely, if we go into a candlestick chart, you will just see big green candles or big red candles where you see these gaps in the volume. All right. And then if we're paying attention to the high volume nodes, the opposite would be true. All right. Most likely what you will see here, if we go to a price chart, is that this is where the market spent a lot of time and transacted a lot of volume. All right. So these are kind of the basics of what we're looking at so far here. All right. And then you will notice there are these blue lines. All right. And in between the blue lines, we call that the value area. That is one standard deviation, and it's telling us where 70% of all the volume was transacted on any given day. All right. And then we have the red line, which represents the point of control. And the point of control is simply just where the highest amount of volume was transacted on a given day. All right. So those are the basics of a volume profile. All right. What we're going to get into here is how to use these for shaping a market context and market bias as well. All right. I'm not going to get into the different shapes of profiles and what that might mean, but this video is going to more focus on using a volume profile to develop a bias and develop context for the markets, for me, for the purpose of day trading. Okay. So we can understand that 70% of all the volume was transacted within the value area in between the blue lines. All right. And we can call that fair value realistically. Okay. So one way that we can see trend in the markets without even looking at a price chart is that we simply look where value is transacting, right? So if we take a look at this day here, all right, we had the market shifting down value, and then all of a sudden we see the value starts getting shifted up, and we can see the point of control is much higher where the most amount of transactions have happened. And then we see the next day value shifts up again, and then the subsequent day value shifts up once again. So this could be an uptrend. This is what we could describe as an uptrend if we're just doing volume analytics, since we see that the value of this market is shifting higher and higher on subsequent days. Okay. So that is one way that we can read the volume profile here. All right. Now, If we want to take a look at some of the important aspects of the volume profile, let's go back here. These are each individual days, and we can see that value was shifting down. We were in a downtrend, all right? Really from up here is where it was initiated, and then we have a shift down in value. We have another shift down in value, all right? We have another shift down in value, and then we have the last shift down in value, okay? So the market was trending down at that point, all right? Then we notice the first shift up in value, all right? The first shift up in value, all right? After you get a shift in value in the markets, then the important points for the market participants to defend become, in the case of a shift up, is near the point of control, all right? And then we have the discount range, or the below the value area low, all right? So we see a shift up in value, all right? And then the next day we see another shift up in value, kind of confirming the trend at this point, all right? So we have a shift down, down, up, and then the second day is up, kind of confirming the trend at this point, all right? Buyers now, after this first shift up in value, it's going to be important for the buyers to defend the value area low, or the point of control, or I should say below the value area low, the discount prices, all right? Or the point of control, all right? So we can take a look at that, and we can see that the market continues to shift up, shift up, shift up, and shift up higher, all right? And then this is the last shift up before we start to get a shift down in value, all right? Now, the opposite principles are true, okay? So, if we have a shift down in value, then it becomes important for the sellers to defend the point of control. And if we take a look at these two profile shapes here, they're basically on the same plane, right? So the value is basically on the same plane. You have a point of control slightly higher on the second one. But if we were to combine these profiles together, we could say that this is the point of control, right? Because if we combine both those volume nodes together, then that would certainly be the highest amount of volume on that day, all right? So what do we notice the next day? The next day, sellers defend the point of control, right? Right to it. And then we have another shift down in value, all right? But the important levels for the sellers to defend after this first shift down in value are the premium priced areas, all right, and the point of control, all right? Really kind of either or. And a lot of times you will see that when the market actually does pull back, then it's going to be the premium priced areas where the sellers are going to be most interested in defending, okay? So to kind of wrap this up, we had shift up, shift up, shift up, shift down at this point, all right? Now, to confirm that it's a downtrend, sellers must defend the premium priced areas, which are above the value area high, or the point of control, all right? So we see on the next day that we get a shift down, and we had this big volatility event that came right back up to the premium priced areas of this profile after the shift down, and it was defended once again by the sellers. Now, why is that premium prices? Because if we can see that the value area is in between the blue lines, right? Those are considered fair prices by the sellers, all right? If we go above the value area highs, if sellers were already comfortable selling below, they're going to be thrilled to sell above, all right? They're going to be thrilled to sell at higher prices, okay? So that's why we call those the premium price areas, okay? So we see the defense there. We see the defense. Now, if we take things back to that original shift up in value that happened back here, shift down, shift down, shift down, shift up, right? Then we can see that we have the high volume node here, and we have the discount area, all right? The discount area, because if buyers were interested in buying at higher prices after a shift up in value, now below the value area low, these become discount prices for the buyers. And these are the important places for the buyers to defend if they want to maintain control of the market, okay? So what do we notice? Is that we had that shift down in value from up here, down, 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 defense of the point of control, down, defense of the premium price areas, and then we get to the point of control from where the buyers shifted value up. And we can see now another shift up in value that happens after this, okay? So now the story of the market is shifting again. We see that buyers come in and defend the original shift up in value and defend the point of control, all right? And then we get a new shift up in value after the market was shifting down in value, okay? So now the important points for the buyers to defend are going to be the new shift up point of control, all right? Or discount prices down below, all right? Discount prices down below. And really just between these levels, all right? There's another high volume node a little bit lower, okay? But this becomes the new defense of the buyers. And then we can see that there is a shift up, shift up, shift up, shift down, and the buyers defend, right? Because after we have this shift down, well, then it becomes important for the sellers to defend either the point of control or the premium priced areas. And we can see that the sellers clearly don't have as much power. That can be seen as more of just a pullback in the trend rather than a shift in momentum of the trend, but you don't really know until the following day, right? The same principles apply. So hopefully this is starting to make a little bit of sense here, okay? So we see the defense here of the point of control or the discount levels, all right? And then the market continues to shift up, all right? Then we have another shift up in value, a shift up in value, and now we see the first shift down in value, okay? The first shift down in value. So then it becomes important for the sellers to defend either the point of control, right? Or the premium priced areas, right? The premium priced areas. And we have this other level down below here, which is where we saw that first shift up in value, which is important for the buyers to defend, okay? So what we see here is that there was the first shift down in value, and then on the subsequent day, the sellers take control, all right? The sellers take control. So now the bias should not be long anymore. We should be looking to short this market because where there was a shift up in value was not defended by the buyers anymore, all right? So sellers have taken control of this market, all right? Sellers have taken control of this market. And then what do we see on the subsequent day? We see the market rallies back up to the premium priced areas, and then that's where the market starts to shift down again, all right? So hopefully these concepts can help you guys put things in, help you frame a bias for the markets and put the markets in context. Because if we're only looking at price, it's only half of the story of what's actually going on in the markets. Is that the largest participants in the markets, the institutional traders, they are interested in selling at high prices, what they consider high prices, buying at what they consider low prices. And this tells you a story of the large participants and where they see fair value, where they see expensive prices, and who's in control of the market auction at this point, okay? So those are some of the concepts, and I would just review that that is going to help us frame a bias for day trading specifically. All right, and I'm just looking at the regular trading hours here for the micro NASDAQ because it is where most of the volume is transacted and where the largest participants transact volume in the micro NASDAQ, okay? Now, there's going to be another aspect of this. As we know, both price and volume, they are fractal concepts in the financial markets, right? So we have our individual days of volume shifting. But what if we take a look at the bigger picture of volume as well, all right? So what we could do here, if we are on TradingView, is that we could take, this is the front month contract for the micro NASDAQ. We could take a anchored volume profile, all right, and just anchor it back from where we can actually see the session start. Or if we turn volume by time on the bottom of our charts, we can see when volume has started to pick up on this contract, all right? And then now I might want to take a look at the composite of where all volume has been transacted and apply those same concepts as well, all right? So if I anchor my volume profile from before where volume started picking up on this contract, all right, that's going to give me a composite view of all of the volume of transactions on this front month contract, all right? And now what we can do is sort of apply the same principles, but it's going to be a little bit different, all right? So we have our composite profile on the right. We have the value area low, which is the lower blue line, and the value area high, which can be seen as the upper blue line, the point of control in the middle here as well, where the highest amount of volume has been transacted. Now, if 70% of all the volume on this contract was transacted in between this range, then what we could consider is this. On the upper ledge, extreme premium prices, all right? Extreme premium prices. And we could see the lower edge below the value area low of the composite. We can see these as the extreme discount prices on this contract as well, all right? And what do you notice, all right? Where do we stop seeing a shift up in volume and we start to see a shift down? Well, we start to see the shifts down in value once we enter into the premium priced areas of this various contract, all right? The market is saying, hey, according to volume, objectively, those are expensive prices, right? Not a lot of volume transacted there, and it is above the value area. So that's where we start to see the shifts down in value, all right? Where do we start to see the shift up in value? Well, we see that when prices get below the value area low, and this is where we start to see the shifts up in value happening time and time and time again, all right? So using the composite will help us frame a deeper context to the markets and where we should maybe stop thinking about the uptrends continuing or the downtrends continuing and start to potentially shape a different bias after we can see a new shift up in value, all right? So these are essentially your higher time frame levels of extreme demand or extreme supply in the markets where there's going to be much more selling activity, okay? So what we can see here now is that after we've entered into the discount price area of the composite profile, we see that the NASDAQ is shifting up in value, and will probably continue to shift up in value until we get to the expensive prices once again, all right? And then we need to kind of sit on our hands and wait. We have to see that if buyers are willing to accept these higher prices, then what we would need to see is that on an individual day, we need to see that value is built higher where there was premium prices before. Now buyers are accepting those expensive prices and willing to pay higher prices to move the market auction further up, okay? So hopefully this video helped you guys start to create a bias and understand the dynamics of volume profile. And you can use this to shape your bias for day trading, for swing trading. This video was really focused on the dynamics of day trading realistically, and using the volume profiles to trade inside of one of these individual sessions with a high degree of accuracy, while forming and shaping a context and a bias for that individual day before the trades actually start happening. Okay, thank you guys so much. We will see you next time.